All right, so I recommended Nvidia stock late last year, and if you follow that recommendation, you've made a great deal of money on that investment. So is it finally time to take profits in Nvidia stock, sell, and move your assets somewhere else? I'll answer that question in this video. Of course, competition is ramping up, taking on Nvidia in the AI chip industry, so it might be a good time to consider taking profits. But let's take a closer look and answer if it's certainly time to take profits.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned that competition is ramping up, and one of the companies that's trying to take market share away from Nvidia is Intel. And Intel recently announced its Gaudi 3 chip, and they said that it matches and exceeds Nvidia's H100 AI processor when it comes to training and deploying generative AI models. The H100 is one of Nvidia's most popular chips, so if Intel's chip takes market share away from that, that could be a big deal for Nvidia. Powering AI applications for some of the world's biggest tech companies, from Microsoft to Google. Now, according to Intel, the Gaudi 3 is 40% more power efficient with 50% faster inferencing than NVIDIA's H100. Training refers to the time it takes to train an AI foundation model like OpenAI's ChatGPT, while inferencing is for models and apps. Now, Intel says the Gaudi 3 is up to 1.7 times faster when training common large language models. So, if this new chip is as Intel says it is, it could take market share away from Nvidia. More likely, however, in my opinion, is that there's a market large enough for Intel and Nvidia to coexist. Of course, remember when I was talking about Nvidia last year, when its sales and profits began to surge, I highlighted that competition is coming. There's never a situation where a company delivers the kind of growth that Nvidia delivers, right? I've got the chart here. Look at how its revenue and operating profit absolutely explode in 2023 and now early 2024. There's never a situation like this that does not attract competition. Competition sees this and says, we want a piece of that action. We're just not going to let Nvidia keep this entire market to itself. When competition sees someone else making this kind of profit, they're going to want to come in. Even if they're not as good as Nvidia. They're still going to get a piece of the pie. Because customers for Nvidia's products do not want to rely exclusively on Nvidia. So they welcome competition like Intel, and I'm also going to mention another competitor here, Alphabet, coming out with its own chips, and they encourage that, as well as AMD. And they give them market share because they don't want to rely exclusively on Nvidia. It gives Nvidia too much market power. Then Nvidia can continue increasing prices, and these customers have to pay because there's no alternative. So they want to give these others some business, keep them alive, right? Keep them innovating, adding new chips so that they have someone else to go to, a backup in case Nvidia starts to demand too high of a price. And so they're going to take market share. That was inevitable. I was talking about that 6 months ago, 9 months ago, when Nvidia's revenue and profit started to soar. That's always going to be the case. Just like if you ever see me make a video that gets a lot of views and that gets a lot of time watched, the competition's going to copy it, right? They're looking around, they're looking at titles, they're looking at videos that get good views, and they want to copy that format because they see it working and they want to copy it, right? Competition always comes in whenever one business, one creator, or one anything achieves success in any way, shape, or form. So this is to be expected, and I was talking about this 6, 9, 12 months ago. Investors should have been ready for this. And if you're following my channel, you have indeed been ready for this situation. Now, at Alphabet's annual cloud computing conference in Las Vegas today, the cloud computing chief executive Thomas Kurian showed off Google's most powerful AI model, Gemini, which can be used to create advertisement, ward off cybersecurity threats, and spin up short videos and podcasts. But more importantly to Nvidia, the company also touted a new chip designed to handle the massive AI workloads and control the associated rising costs. Now, this has also been around for a very long time. When a business relies on a single supplier, it sometimes does a little bit of production of its own, just in case the supplier, again, becomes unreliable or raises prices. They know they have a backup. And this backup can be a threat that Alphabet can use against Nvidia and say, if you don't keep prices down, if you don't keep terms the way we like it, we're going to produce more of our in-house chip. We don't care that it's not as effective as yours. We're not going to let you tell us and command us and demand higher prices and not give us the terms that we're looking for. So this has always been the case. Alphabet's developing its own chip. Amazon is also developing its own chip. Still, it seems like they significantly prefer Nvidia's chips because Nvidia's chips are that much better. Nvidia's chips are that much better. They still go with Nvidia. Nvidia is selling as many chips as it can produce. It's got more demand than it has supply. And so some of these participants coming in and taking some market share, they're likely going to take that market share that is not served by Nvidia right now, at least in the near term. Longer term, Nvidia's chips are arguably at least one step ahead of the competition. Some say they are at least 2 or 3 steps ahead of the competition. So these newer chips coming into the market, it should not have been expected that Nvidia was going to keep this market all to itself. As of the latest reports I've seen, Nvidia has something like 80% market share of the current AI GPU chip market. Now, that was unsustainable. I didn't expect that to last very long, and so I'm not alarmed with this competitive pressure. Still, Nvidia's stock price from January alone is up from around $500 per share to $852 per share, and the stock price has experienced some headwinds down from its highs in late March. So investors are asking, what's going on here? Is it a buy the dip opportunity, or is it time to take profits if you're in the stock? I mentioned at the top of the video, I had recommended Nvidia stock, late December as one of my top stocks to buy in 2024. So investors are curious about that. But even though the stock price has increased, the valuation has not increased by all that much. It's trading at a forward price to earnings of 28.33, which is not all that much more expensive than where it was to begin the year, because the company has supported that increase in stock price with increases in profitability. It hasn't been an empty increase in stock price like some other companies that had experienced increases in stock price without the subsequent increase in revenue and profitability and cash flow. One AI stock I recently mentioned that did that was Big Bear AI. It's a smaller company, but the stock price about a month and a half ago surged on the back of AI enthusiasm, but the company hadn't delivered the kind of revenue, profit, and cash flow growth that Nvidia had delivered. It was just based on enthusiasm. And so that stock price has fell dramatically since that boom. Nvidia is different. Nvidia's stock price has boomed, but so has its profit. Now, that's not to say that Nvidia's stock price is not going to fall. There's certainly a chance of that happening, and Nvidia has been a volatile stock over several years. It has experienced violent price movements. So this is not a stock for investors that are not willing to take some risk. It is an above average risk stock. So understand that to be sure. So considering the valuation hasn't changed all that much, and the company's revenue and profits are still exponentially growing quickly, and competition is likely to take some share of the market, that was to be expected, but there isn't evidence that any of these companies so far would prefer any other chips in the market other than Nvidia's chip. So to answer the question, the last time I updated Nvidia stock was on March 31st, and I reiterated the recommendation that Nvidia belonged as a top 25 stock to buy in 2024 and one of my top 10 growth stocks in 2024. So is it time to take profits? I mean, you could, but in terms of the actual valuation of the stock, I'm not changing the recommendation. I'm keeping it rated as a top stock to buy and a top 25 stock to buy today, given the company's excellent performance. If you've made a lot of money and you want to take some profits, that's fine too. But in terms of my recommendation, I'm not downgrading. I'm not suggesting it's time to take profits. I'm reiterating my recommendation that Nvidia is an excellent stock. It's one of my top stocks to buy still in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.